If anyone felt that 2011 would be the year the banking sector regained a firmer footing after the credit crunch of 2008, they'll surely be disappointed. Banks, at the root of much of the turmoil 3 years ago, were a big focus again in 2011. Louise Cooper, senior financial analyst at BGC Partners, says the share price tells the story.
Clearly, one of the biggest losers, or the biggest loser of the year, has been the banking sector, the financial services industry. And this is a chart of the financial services and banking industry share prices across Europe. And you can see it's a pretty dramatic chart. Effectively, what it's telling you is that share prices of banks have roughly halved in the last year. Now, that is a dramatic move. And the problem is that banks own so much sovereign debt.
And it was the year that capital became king. A mid-year stress test underlined a new mood for minimum capital requirements. New guidance proposed under Basel III would set the bar for capital and liquidity levels much higher. In the UK, regulation went a step further with new rules to separate banks' retail arms and investment arms. Bankers moaned and predicted extra costs would be passed on to the customer. The upshot is that the banks need bigger capital cushion to help avoid a repeat of 2008. Michael Hewson, market analyst at CMC Markets, says there'll have to be a shake-up with banks either allowed to fail or be amalgamated.
Our banks won't survive. The European banking sector needs to be a lot smaller. There needs to be some sort of what I would call creative destruction of the weaker banks, zombie banks. Debt, unfortunately, I think is now far too big without having some form of restructuring.
But David Buick from BCG says it's essential that the market regains confidence for the sector to truly recover.
It's going to have to raise something like, in the next couple of years, €1.5 trillion in terms of subordinated capital, which they've got to get from the bond market, and they will be in competition with governments who've got their work cut out for them. And I think Europe and the United Kingdom is going to go through a very, very tough 5 years.
And with austerity measures squeezing pocketbooks further, few will be comfortable betting on the banks. Penny Tweedy, Reuters.